Hello everyone, thank you for tuning into this video podcast. My name is Sahini, a Senior Client Investment Specialist at Alexforbes Investments, and I'll be taking you through the slides that follow. This podcast focuses on the Performer portfolio. This portfolio is a moderate to high risk, multi-asset portfolio that aims to outperform the Alexforbes Investable Global Large Manager Watch median. In addition, the portfolio targets CPI inflation-beating returns over the long term, that is, CPI plus 5 over rolling 5-year periods. It adopts our risk-based, forward-thinking investment approach with the aim to achieve client outcomes with a greater degree of certainty. The asset allocation is dynamic, allowing the portfolio to participate on the upside and to protect on the downside in falling markets. This portfolio blends diversified strategies, including alternatives both locally and offshore, to capture different sources of performance. Please note that the portfolio is managed in accordance with the prudential requirements legally required for South African retirement funds. Let's take a look at the portfolio's design and asset allocation. A significant portion of the portfolio is managed by our peer-focused, domestic balanced underlying asset managers with underlying portfolios comprising the global component of the portfolio. This structure is to use a wider global opportunity set to execute our strategy in accordance with the investment policy of the portfolio. Take a look at the performance of the portfolio to the end of March. Performer has outperformed the benchmark for the quarter in an environment that was affected by geopolitical risks due to the Russia-Ukraine war, which was negative for global asset classes. The portfolio also outperformed the market driven by the JSE. The portfolio is ahead of its CPI plus 5 objective over the 5-year period to the end of March 2022. And in addition, this portfolio has an 85% success rate in achieving its inflation target over rolling 5-year periods since inception. Both asset allocation and share selection contributed to performance for the quarter and the year. Take a look at the building blocks to March, with bars represent your 3-month returns and the orange dots represent your 12-month returns. Performer's relative position to peers was underweight offshore equities and overweight domestic equities on average, which benefited relative performance in this environment where domestic equities rose while offshore equities tumbled due to heightening political risks after Russia invaded the Ukraine. The domestic balanced asset managers delivered positive returns over the quarter. Asset managers with higher exposures to equities and that held resources delivered positive outperformance for the quarter. All managers delivered positive alpha for the quarter, with Aluwani delivering the highest. The exposure to domestic hedge funds contributed to absolute returns and outperformed the performer benchmark in a strong SA equity environment over the past 12 months. In particular, the equity hedge component performed better than fixed income hedge strategies, led by long-short bias managers benefiting positive and added to the alpha of performer in an environment where the offshore component was negative. Africa detracted to relative performance driven by lower returns from regions like Nigeria and Egypt. In addition, concerns around rising inflation, geopolitics, and a stronger rand detracted from these returns. With regard to global over the quarter and the year, the offshore component, Performer International, lagged its peers and detracted from the portfolio's return. Here are the long-term target weights as at the end of March in the portfolio, as well as the asset allocation. Thank you for taking the time to listen to this video podcast. Please visit our website to gain access to our latest insights, content, and media publications. Otherwise, contact your consultant for more information. Thank you and goodbye.